Thank you, Mr. President. Distinguished colleagues, it is with a profound sense of duty and commitment to our nation's progress that I rise today to lead the debate on the Factoring Regulation Bill 2024.
No, you can go ahead.
Thank you, Mr. President. Once again, my name is Asuko Ekpeyon, Senator representing Cross River South. This crucial piece of legislation, which was read for the first time on the 11th of June 2024, directly addresses one of the most persistent challenges faced by our small businesses: delayed payments. Across the country, MSMEs deliver goods or services, issue invoices, and then wait 30, 60, or sometimes 90 days before receiving payment. In the meantime, they struggle to pay workers, purchase raw materials, or accept new orders. This cycle of weak cash flow not only traps small businesses, but also slows down our economy's overall growth. Mr. President, distinguished colleagues, MSMEs are the backbone of our economy, over 40 million strong. They provide the bulk of jobs and contribute significantly to national output. Yet most remain excluded from affordable credit because traditional bank lending depends on collateral they often do not have. The result is a structural cash flow trap that limits their survival, expansion, and competitiveness. Factoring provides a tested solution. Instead of waiting months for payment, a business can sell its verified invoice to a licensed factor, whether a finance company or bank, at a small discount. The factor immediately pays most of the invoice value, often up to 90%, and later collects from the buyer when payment is due. Unlike a bank loan, which relies on collateral or the SME's own credit history, factoring is based on the buyer's credit worthiness and the validity of the invoice. In this way, businesses can access financing on the strength of their sales and not their fixed assets. Given that invoice factoring constitutes a financial service and involves the trading of receivables as financial assets, it falls naturally within the regulatory purview of the Securities and Exchange Commission, whose mandate is to protect investors, ensure market integrity, and foster confidence in Nigeria's financial market. The bill before us establishes the legal framework, safeguards, and transparency mechanism necessary for factoring to thrive responsibly in Nigeria. It provides for the licensing and supervision of finance companies engaged in factoring, ensures that costs and fees are disclosed in plain language, and makes invoice transfers legally enforceable to avoid disputes. It further aligns with ongoing digital reforms such as e-invoicing and receivable registries, which reduce fraud and make verification faster. Importantly, it encourages government agencies and large corporations to support supplier financing programs that allow MSMEs to access early payments at low cost. Mr. President, distinguished colleagues, the benefits of this bill are clear and immediate. For MSMEs, faster access to cash, stronger inventories, timely payrolls, and the confidence to accept bigger orders. For the economy, shorter cash cycles, reduced informality, better payment discipline, and increased investors' confidence in a transparent, well-regulated asset class. International experience shows the transformative potential of factoring. In Mexico, the government's Cadenas Productivas program unlocked billions of dollars in working capital for small suppliers. In India, online platforms made it possible for MSMEs to finance invoices from both private and public sector buyers. In Chile, electronic invoicing deepened the factoring market, while in Brazil, reforms to receivable registry opened safe access to credit for smaller firms. Even closer to home, South Africa has seen significant growth in supply chain finance to support its smaller suppliers. Industry analysts indicate that with clear rules, Nigeria could unlock over $1 billion annually for small businesses through factoring funds that directly supports jobs, production, and local value chains. To ensure responsible growth, this bill mandates periodic reporting on volumes, delinquency trends, buyer concentration, and MSME participation so that the regulator can monitor performance and adjust rules as necessary. It also commits to MSME literacy through standardized term sheets, plain language contracts, and cost disclosure templates, ensuring that small businesses can use these tools safely and effectively. Mr. President, my distinguished colleagues, this is not another short-term credit scheme. It is a structural reform, one that converts invoices that MSMEs already hold into usable capital. By passing this bill, we will empower Nigerian businesses to hire faster, restock sooner, and grow stronger without resorting to expensive collateral-backed debt. I therefore respectfully urge my distinguished colleagues to give their full support to this bill at second reading. Thank you very much.
Senator Mgbeke.
Sorry, the Senate President, my distinguished colleagues.
Senator Garba Musa is still analog, it's not digital.
My name is Senator Garba Musa Maidoki, representing the good people of Kebbi South Senatorial District. I rise to second the motion ably moved by Senator Ekpeong on factorizing of invoices so that SMEs can have ready-made access to continue operating their business and all the necessary advantages that arise. I also wish to say one or two things on factorization, sir. Invoices that comes with terms, particularly government invoices, that have 30-day maturity or 40 days leave. We must put it in this law that once those period for which the invoices stated that it must be paid has not been paid, that interest must be paid to those invoices until the day they are paid. If we do not regulate how invoices are dumped by different organizations, either government or private, then it means whether we factorize, the value for which we want to achieve will be misdirected. I so submit. Thank you.
Senator Abdullah Yahaya, former
representing Kebbi North. Mr. President, this bill is a very important bill, particularly because of the nature of our economy. Our economy, just like he has rightly said, is dominated by the informal sector, a lot of which the small and medium enterprises prevail. So I think the issues about factorization in order to boost their efficiency is a very important milestone that we should attain in order to bring up these enterprises to the level that they can be properly regulated and taxed. But one issue which I just want us to remember is that a similar bill on this issue, I can remember, was presented by distinguished Senator Abiru, I think before we went on recess. So I will recommend that this issue be taken to the Committee on Banking with Senator Asuko together with Abiru so that they can harmonize the two bills together. And let's fast track their presentation, so that a third reading can be made, and let's prepare the bill for both the House of Representatives and also for assent by Mr. President. But I think it's a very important issue, and I think we should prioritize the work on these two bills so that we can be able to resolve this issue once and for all. Thank you, Mr. President.
Those in favor that this bill commends Senator Asuko for bringing forward this bill. As said earlier, this bill will certainly, when passed into law, help in strengthening our economy, because the informal sector and the small and medium-scale enterprises are the dominant entities that we have in our economy. And in fact, they are the backbone of our economy. So any move to assist them in this direction will help in strengthening these entities and so strengthening our economy, bringing more vibrancy to our economy. So I commend you very well for your foresight. I'm not surprised because I'm an economist, a former Minister of Commissioner of Finance. So you've done very well. This is highly commendable. I also commend those who contributed to the debate on this very important bill. So this bill is now, as I said by the former leader, there's a need for consolidation, for harmonization of the one that was earlier brought by Senator Abiru with yours, so that we can have a very, very formidable act when passing to law that will help to strengthen our small and medium small and medium enterprises. So the bill is referred to the Committee on Banking, Insurance and Financial Institution to report back within 2 weeks.